Check, please.
Hey, welcome back to Everything Money. Today we're going to talk about Micron. This has been an old sort of famous company. It had a big fall from grace after the 2000s. We'll show you the financials behind where the stock price is today. We'll show you what you should be paying for Micron moving forward using our stock analyzer tool. And if you want to trade this company at a quicker pace, Mo will show us the daily charts and the weekly charts. This stock is held by a lot of famous investors. We'll talk about it. I bring your questions about Micron to Paul and Mo. They own and operate. They have $100 million portfolios, and they'll guide us down the path of investing our wealth. Let's get after it. Paul, what do you think? Micron, baby.
Thank you, Seth. First off, guys, follow our Instagram account, Everything Money Investing, and then also follow Seth, Mo, and I personally. It really feeds our ego. We love it very much.
Yep.
So, guys, Micron Technology. Let's go to Everything Money. I believe our interview with Mohnish Pabrai, he likes Micron, right?
Oh, yeah, big time. Yeah.
Okay.
One of his very few holdings is Micron.
So this is our 8 pillars tools. More on that later. Micron Technology, MU. Okay. So let's look at the next chart for Micron. Oh my God, look at this, Sethi. What do we have here?
Oh, we forgot about this one. This is the
What
Cisco,
do we have
the
here?
Cisco, the Intel, the all of them.
I think it's just now beating finally its all-time high in 2000. Guys, look at this date, 2000. All of the hypesters out there would have said, well, yeah, look at this, but then it fell, but then look at this, it came back, and they would have said, buy this thing, it's going to the future. Now, the stock is about where it was 22 years ago. 22 years ago. Last year, they did $29 billion in revenue. 22 years ago, they did $3.37 billion in revenue. So 9 times larger. If I had told you at this point, the revenue would be 9 times larger 22 years from now, would you have thought the stock would be exactly the same? Of course not. But why did that happen? Because you can overpay for growth. You can overpay for this stuff. That's exactly the point. What we're trying to teach here is you can overpay for things and you can underpay for things. The market is not completely rational. Efficient market theory does not work. This is irrational. And it played out. It got as low as, Jesus Christ, how low was that? $4 or $5 a share from 95. So anyways.
Mohnish Pabrai added another 2% of Micron, Paul. It's 58% of his portfolio, 1.5 million shares. Guy Spier has a lot of it. Seth Klarman.
58% of his portfolio?
Seth Klarman. And then a guy named David Tepper.
Oh, Seth Klarman did?
Seth Klarman has 7 million shares.
Oh, wow.
Micron.
I like Seth Klarman. Mm-hmm. He likes Intel a lot, too. Did you say David Tepper?
I did. David Tepper actually reduced.
He reduced his position?
By half.
He owns the Carolina Panthers. Is that what he owns?
Wow.
I think.
And then someone named Lee Ansel, Maverick Capital, bought up 200% of this, increased their position by 200%. So a lot of top investors out there really like Micron. Show us why.
Okay, so let's do our 8-pillar analysis. This is what we use to screen stocks. First pillar, we want the 5-year PE under 22.5, 14.7. Okay. Now I started to see why maybe they like it. Off the dribble. Pillar number 2, we want the 5-year return on invested capital greater than 9%. It's 7.2. So that's an X. Not that great, which I'm kind of surprised about with the technology business, but I'm not afraid of it yet. Look at this adorable little dividend. 0.1% pays out $100 million. Great. 5-year average free cash flow, 3.73. Last year, 3.9. So very consistent free cash flow. Pillar number 3. We want revenue growth over the last 5 years. So we click the income statement on our software. 5 years ago, they did $23.1 billion. Last year, 29.6. So there has been revenue growth over the last 5 years. Pillar number 4, we want profit growth over the last 5 years. So we scroll down a little bit. 7.59 to 7.36. It's actually an X there. That's interesting. Guys, very inconsistent profit here. What is going on here? They probably sold something here. I imagine they sold something here to get 14.75. Did they? Maybe I'm wrong. That's weird. Oh, well. Pillar number 5. Guys, we want shares outstanding staying the same or going down. And here's why. If a company has 10 shares outstanding, you own 1. You own 10% of the business. If they buy back 2 shares, you still own your 1 share, but now it's out of 8 shares. You now own 12.5% of the business. Your ownership has gone up just by you being a good shareholder. The company's rewarding you with their cash flow by buying back shares. So we scroll all the way to the bottom of the income statement. We go to the end of year 6, 1.04 billion shares to 1.12. That's an X. So shares have gone up very, very little, but they have gone up nonetheless. It's still an X. Pillar number 5 has to do with debt. Guys, debt in a company is just like debt to you in real life, in your personal life. The more debt a company has when there are hard times, it's going to be detrimental to them. Okay? We haven't had hard times in a while. So we go back to the main page, 5-year average free cash flow. We take that number, we multiply it by 5. That gives us $18.5 billion in long-term liabilities, right? So we want their long-term liabilities to be less than $18.5 billion. So we go to the balance sheet, we scroll all the way to the bottom, and we have $8.83 billion in debt, less than half of what we're looking at. They can pay off all their long-term liabilities in under 3 years. So that's pretty awesome. Pillars number 7 and 8 have to do with free cash flow. So we go to the cash flow statement. Seth, explain free cash flow to our wonderful users.
Yeah, so this is cash from operations minus capital expenditures, and these expenditures can be pay down debt, pay a dividend, reinvest in themselves, buy back shares, make acquisitions, all they can do with cash flow. Paul, you see how fast I rattled that off?
It's amazing.
I'm an expert now.
So to make it easy for you guys, we added this line for free cash flow. This does not exist in any other financial statement. We did it for our users. 5 years ago, they did 5.23. Last year, 3.88. That's an X. So they have decreasing free cash flow. So it's funny. Everybody, value investors have the same thought process, but different results. I'm looking at this going, I'm done. But Mohnish and all these other guys have found it saying, no, there's something here. I look at it from a business perspective, and I look at it going, I don't know if I'd want to own this business. It doesn't seem cheap enough, but I don't know. Maybe I'm wrong. So our final metric is we take the 5-year average free cash flow, we multiply it by 20 to get a market cap of some sort of where we want to buy the company. So 3.73 times 20 is $74 billion. What's the actual market cap, Uncle Seth?
Oh, boy.
I always forget to do this now. We want under 74 billion.
106.
106. So it seems high. Does that mean we shouldn't buy it? No. Because remember, growth rates matter. If a company is going to grow 100% a year versus another one for 0% a year, which one would you pay more money for? Mm-hmm. You pay for 100% a year if everything else is equal, right? So we created the stock analyzer tool because every investment is the present value of all future cash flow. And we don't know the future of these companies. You have to make assumptions and guesses of what's going to happen. The stock analyzer tool allows you to input those assumptions and it'll spit out exactly what you should pay based on those assumptions. So first things first, I put 10-year analysis. You can do 1 to 20. Now, revenue growth numbers. Oh boy. Mo, I'm going to need your help here.
Oh boy.
Yeah, exactly. There's a lot of,
you want to go 6, 8, 10?
Let's do it. I love it. Profit margin.
Probably around that 22%. 20.
How about 20?
20 and a half.
20.5, 21 and a half, and 22.5?
Good.
Although it's been higher the last 5 years, though. Let's do this. I'm actually going to go 20.5, 22, and 24.
Okay. Free cash flow is drastically different.
Free cash flow is drastically different. Why is that? So that's something that's immediately a red flag to me. Why is the free cash flow margin so much different than the profit margin? You have to understand that before you go into the company. So free cash flow margins. Mo, what do you think?
9, 10, 11. Is that too low? On the low side? 10, 11,
yeah, probably.
12?
Let's go 10, 11, 12.
Okay.
PE.
14, 16, 18.
If it's okay with you, how about 13, 15, 17?
Sounds good.
And same thing with price of free cash flow. And then I'm going to do 12.5% return because, guys,
sounds good.
You can get an ETF for 9 or 10% return. So if you're going to buy an individual stock, make it worth your while. Have your margin of safety. Get your 12.5% return. We hit the analyze button. All right. This is all over the board.
What do you think?
We have a low of 38 and a high of 140. So to me, this is the too hard pile.
Yeah.
But the great value investors, Seth Klarman, Mohnish Pabrai, Guy Spier, they have seen something that I immediately just go, I'm out.
Yeah.
But they know something that I don't, they see something that I don't see. And I'm okay with that. I'm not going to go ride their coattails because I don't get this, so I'm not going to buy. Because I see these value ranges so wide and the stock at 95. Now, I will say, if the stock fell in half today, I'd be like, well, wait a second.
Yeah. And don't forget, I think Mohnish has held this for quite some time.
Has he?
Yeah. It's not like he just took a massive position in this. So
okay.
There was a time that maybe it was better. Maybe he didn't see that. Maybe it didn't look like this previously.
If this resonates with you and you're looking to get this data, we provide it for you in our software. You can have it on your phone right now. You can look up Micron and other companies. Paul, tell them how.
So guys, we created a software because our users were sitting there saying, how do we analyze stocks without waiting for you to make a video? There are 10,000 stocks out there. They wanted to analyze them themselves. So we made our software. We spent hundreds of thousands of dollars. You get all of this. You get everything you've seen so far, the 8 pillars tool, retirement calculator, stock analyzer, 8-pillar portfolio, exclusive video content. Every single day we post 1 to 3 videos made by us only for our users. You get all of this. You get everything on the phone app, like Seth said. But most importantly, if you feel alone, you get the community of over 6,000 people who use the software every single day to talk about your investment ideas. Because you might be the only one of your friends who believes these thoughts. You can't talk to them. You go into the chat right here in the top right corner or on your mobile phone and talk every day about every investment idea you have. This is all for only $1 per day. Whatever price you pay, you are locked in forever. $1 per day gets you everything here. 30 years of financial data. This is a no-brainer, guys. Our competitors are $199 to $500 a month. $1 per day gets you this software. Go sign up now. 2 ways to sign up. everythingmoney.com or Patreon. The benefits of everythingmoney.com is you don't pay sales tax yet because we're not big enough. Sign up $1 per day.
And if you're looking to trade Micron at a quicker pace, you can join Mo and all of his tutelage in the BitNass Nation, and he'll show you how to trade this, which he's showing Paul and I, which is getting lovely. It's getting spicy, Mo. Show us about Micron. Oh, it's overbought. I can see it from here.
Yeah, it's overbought, and these are all-time highs right here. So we are right back to those all-time highs. So what do you do here? With it being overbought like this, with it approaching all these all-time highs, there is probably not a lot of volume that's happening right here. We'll switch over to the daily chart just to make sure, but if you want to do something, you need to break out with volume to new all-time highs and try to run this thing. This thing could absolutely turn into a power stock where you get to this overbought area and you just go sideways for months and months while your stock price just keeps climbing and climbing. That's a very real possibility, but you need volume for that to happen. Let's see. Is there volume? Volume is completely, I mean, look at this. That yellow line down there, that's average volume. And if you look back, dating back to November, there are not a lot of days in there with the exception of some blips here and there. You are not touching average volume. So I would not bet on this thing to break out to new all-time highs. Plus, it looks like you're starting to get a rollover on the daily stochastic. This to me is something that you need to be very patient with and look for this thing to turn into a short position. Now, this is also a good stock to day trade because you do get that volatility. Yesterday, had you been paying attention to this, you bounce over 80%, you get an engulfing candlestick, this probably would have been it right here, and you get a move to the top side with increasing volume through the end of the day, sell at the end of the day. And today, you're starting to get into that shorting position where you're getting good selling volume, some movement down, wait for an engulfing candlestick and get into it. I like tech stocks that are more volatile just because you can capitalize on these situations from a day trading perspective on a 15-minute chart. So if you like this and you want to join me and learn these rules, come and join me. You get the Trading 101 series, which is all of the rules that you need to be successful from any charting perspective. The Employed Trader series, which is 6 stocks that you go through on a daily basis with me. I update you. If you're a working person, I do the legwork for you and trade for you. You get my exclusive monthly seminars, 1 Saturday per month, open Q&A session, and a chat community of 1,000+ people. Come and join me.
That is our take on Micron. I agree with you, Paul. I've had very little guidance in terms of buying stocks through my 20s and mid-30s. Luckily, I found you, and so you're sort of my teacher as you at home. But you're right. If it gets too difficult, I definitely don't have any inside information on Micron.
By the way, the other thing is, it does not affect me that 3 people that I very much respect like Micron. I just don't get it, so I'm not going to buy it. And these are 3 people that I think are brilliant and better investors than me, and I just don't get it, so I don't buy it. And I literally don't go, damn, what am I missing? I just go, oh, okay, they see something better than I do.
I have FOMO when I see.
I know, everybody has FOMO. That's what makes me a great investor. I don't have FOMO.
That's our take. Fondle thumbs up. Join the community.
Laughing and I'm being serious.
You'll love it. You'll see you next video. Thanks.